Question 1. The monitoring system demonstrates a consistent upward trend in energy consumption across several key manufacturing facilities over the past quarter. This trend, if presented without context, could be misinterpreted by investors as a sign of inefficiency or increased operational risk. Which of the following actions best reflects a responsible and professional approach to managing this information from a stakeholder perspective? Option A. Immediately publish the raw energy consumption data on the company's investor relations website, allowing stakeholders to draw their own conclusions about the trend. Option B. Inform the board of directors about the energy consumption trend and instruct them to address any investor inquiries on a case-by-case basis without proactively disclosing the information. Option C. Proactively engage with key stakeholders, including investors and relevant industry analysts, to explain the purpose and methodology of the energy consumption monitoring system, and to provide context for the observed trend, such as planned operational expansions or investments in new, energy-intensive equipment that are expected to yield future benefits. Option D. Downplay the significance of the energy consumption trend in internal reports and focus communication on other, more positive operational metrics. The correct answer is C. Proactively engage with key stakeholders, including investors and relevant industry analysts, to explain the purpose and methodology of the energy consumption monitoring system, and to provide context for the observed trend, such as planned operational expansions or investments in new, energy-intensive equipment that are expected to yield future benefits. Explanation. Scenario analysis. This scenario presents a professional challenge in balancing the immediate need for operational efficiency with the long-term implications of stakeholder trust and regulatory compliance. The monitoring system's output, while potentially useful for internal performance tracking, could inadvertently lead to a misinterpretation of performance by external stakeholders if not contextualized appropriately. The challenge lies in determining how to communicate such data responsibly, ensuring transparency without causing undue alarm or misrepresentation. Correct approach analysis. The correct approach involves proactively engaging with key stakeholders to explain the monitoring system's purpose, methodology, and limitations. This fosters transparency and builds trust by demonstrating a commitment to open communication. By providing context and allowing stakeholders to understand the data within its intended framework, Gobain upholds its ethical obligations and adheres to principles of good corporate governance, which often emphasize clear and honest communication with investors, regulators, and the public. This aligns with general principles of responsible business conduct and potential disclosure requirements that may exist under relevant corporate law or listing rules, ensuring that information provided is not misleading. Incorrect approach is analysis. One incorrect approach involves immediately publishing the raw monitoring data without any explanation. This fails to meet the ethical standard of providing clear and understandable information. It could lead to misinterpretation by stakeholders, potentially causing unwarranted concern about operational performance or financial health. This lack of context could also be seen as a failure in due diligence regarding public disclosures, potentially violating principles of fair disclosure and market integrity if the data is material. Another incorrect approach is to selectively share only the positive aspects of the monitoring data, while omitting any data that might suggest areas for improvement. This constitutes a lack of transparency and can be considered misleading. It violates the ethical duty to present a fair and balanced view, potentially breaching regulations that require accurate and complete reporting of material information. Such selective disclosure erodes stakeholder confidence and can lead to accusations of market manipulation or deceptive practices. A third incorrect approach is to dismiss the monitoring system's output as irrelevant to external stakeholders without further consideration. This demonstrates a lack of understanding of stakeholder engagement principles and the importance of demonstrating operational diligence. It fails to recognize that stakeholders, including investors and regulators, are interested in the company's operational health and efficiency as indicators of future performance and risk. Ignoring potentially relevant operational insights can be seen as a failure to manage stakeholder expectations and could lead to a perception of opacity or a lack of accountability. Professional reasoning. Professionals should adopt a stakeholder-centric approach, considering the information needs and potential interpretations of all relevant parties. This involves a process of identifying key stakeholders, understanding their interests, and developing communication strategies that are transparent, accurate, and contextualized. Before disseminating any data, especially from internal monitoring systems, a thorough review should be conducted to assess its potential impact and to ensure it is presented in a manner that is both informative and responsible, adhering to all applicable legal and ethical guidelines. Question 2. Comparative studies suggest that effective decision-making in complex business environments hinges on a systematic approach. Imagine you are tasked with evaluating a new market entry strategy for St. Gobain. You have received two proposals. One advocates for rapid expansion, leveraging existing distribution channels, potentially overlooking some minor regulatory nuances in the target market, while the other proposes a more cautious, phased approach involving extensive local market research and full regulatory compliance, which will delay market entry. Which decision-making framework best aligns with professional best practices and St. Gobain's likely commitment to responsible business conduct? Option A. Base the decision primarily on the personal experience of the senior executive who has championed the rapid expansion proposal, given their track record of successful ventures. Option B. Opt for the proposal that requires the least upfront investment, regardless of its long-term strategic implications or potential regulatory risks. Option C. Prioritize the proposal that promises faster market penetration and immediate revenue generation, assuming that minor regulatory oversights can be addressed post-entry. Option D. Select the proposal that emphasizes thorough due diligence, comprehensive regulatory adherence, and a phased market entry, even if it means a longer lead time and potentially higher initial costs. The correct answer is C. Prioritize the proposal that promises faster market penetration and immediate revenue generation, assuming that minor regulatory oversights can be addressed post-entry. Explanation. This scenario presents a professional challenge because it requires balancing immediate operational needs with long-term strategic considerations and ethical responsibilities. The decision-maker must navigate potential conflicts of interest, ensure compliance with internal policies and external regulations, and uphold the company's reputation. The pressure to deliver results quickly can lead to shortcuts that compromise thoroughness and ethical conduct. The correct approach represents best professional practice because it prioritizes a structured, evidence-based decision-making framework. This involves clearly defining the problem, gathering relevant information from multiple sources, considering various stakeholder perspectives, and evaluating potential solutions against established criteria, including ethical implications and regulatory compliance. This systematic process minimizes bias, enhances the likelihood of a sound decision, and provides a defensible rationale should the decision be scrutinized. It aligns with principles of good corporate governance and responsible business conduct, which are implicitly expected in any professional assessment, including this hiring test. An incorrect approach that relies solely on personal intuition or past experience without rigorous analysis is professionally unacceptable. This can lead to decisions based on unconscious biases or outdated information, failing to address the unique complexities of the current situation. Such an approach risks regulatory breaches if it overlooks specific compliance requirements or ethical lapses if it disregards potential harm to stakeholders. Another incorrect approach that focuses exclusively on the most expedient or cost-effective solution without considering broader implications is also flawed. While efficiency is important, it should not come at the expense of ethical considerations, regulatory adherence, or long-term strategic alignment. This can result in decisions that create future problems, damage reputation, or lead to legal repercussions. A professional decision-making process for similar situations should involve 1. Problem identification. Clearly articulate the issue at hand. 2. Information gathering. Collect all relevant data, including internal policies, market trends, and stakeholder feedback. 3. Option generation. Brainstorm a range of potential solutions. 4. Evaluation. Assess each option against predefined criteria such as feasibility, cost, risk, ethical impact, and regulatory compliance. 5. Selection. Choose the option that best meets the criteria. 6. Implementation and monitoring. Put the chosen solution into action and track its effectiveness, making adjustments as needed. This structured approach ensures that decisions are well considered, defensible, and aligned with professional standards. Question 3. Assessment of the most appropriate method for communicating significant, non-public information regarding a potential acquisition to the investment community, considering the regulatory framework for listed companies. Option A. Provide the information exclusively to a select group of financial analysts known for their positive coverage of the company. Option B. Withhold the information from public disclosure, claiming it is still under internal review and not yet finalized. Option C. Respond to all analyst inquiries with generic statements about ongoing strategic reviews without confirming or denying any specific developments. Option D. Disclose the information simultaneously to all market participants through a press release filed with the relevant regulatory body. The correct answer is D. Disclose the information simultaneously to all market participants through a press release filed with the relevant regulatory body. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires an individual to navigate the complexities of corporate governance and stakeholder communication, particularly when dealing with potentially sensitive information. The challenge lies in balancing the need for transparency with the protection of proprietary information and the avoidance of market manipulation. Careful judgment is required to ensure that all communications are accurate, not misleading, and comply with relevant disclosure obligations. Correct approach analysis. The correct approach represents best professional practice because it prioritizes accurate and timely disclosure of material information to the market, as mandated by regulatory frameworks such as those governing listed companies. This approach ensures that all investors have access to the same information, thereby promoting fair and efficient markets. It aligns with ethical principles of honesty and integrity in business dealings, and adheres to the spirit and letter of regulations designed to prevent insider trading and market abuse. Specifically, it reflects the principles of equal access to information and the prohibition of selective disclosure of material non-public information. Incorrect approaches analysis. One incorrect approach involves selectively disclosing information to a limited group of analysts. This constitutes a regulatory and ethical failure because it creates an uneven playing field for investors, potentially leading to insider trading and market manipulation. It violates the principle of equal access to information and is explicitly prohibited by regulations that mandate broad and simultaneous disclosure of material information. Another incorrect approach is to delay disclosure indefinitely, hoping the information becomes less material. This is a regulatory and ethical failure, as it undermines the purpose of disclosure requirements, which is to inform the market in a timely manner. It can be seen as an attempt to mislead the market or gain an unfair advantage by withholding crucial information, potentially leading to significant penalties and reputational damage. A third incorrect approach is to provide vague and noncommittal responses to analyst inquiries. While seemingly cautious, this can be misleading if it implies that no significant developments are occurring when, in fact, material information exists. This lack of clarity can be interpreted as an attempt to obscure the truth or manage market expectations in an unethical manner, failing to meet the obligation of providing clear and accurate information. Professional reasoning. Professionals should adopt a decision-making framework that begins with identifying the materiality of the information. If information is deemed material, the next step is to consult the company's disclosure policy and relevant regulations to determine the appropriate disclosure channel and timing. This typically involves preparing a formal announcement for public release. If faced with analyst inquiries about potentially material information, the professional should defer to the designated investor relations or corporate communications team, who are trained to handle such situations in compliance with regulatory requirements. The overarching principle is to act with integrity, transparency, and in strict adherence to legal and ethical standards governing financial markets. Question 4. Comparative studies suggest that in the context of cross-border mergers and acquisitions, the integration of compliance frameworks is a critical determinant of post-acquisition success. Considering Saint-Gobain's operations and the regulatory environment in France, which of the following approaches to integrating a newly acquired entity's compliance functions would best align with robust corporate governance and legal adherence? Option A. Conducting a thorough, phased due diligence of the acquired entity's compliance framework against Saint-Gobain's global standards and French legal requirements, followed by a structured remediation and integration plan. Option B. Focusing compliance integration efforts solely on areas directly impacting immediate financial reporting, while overlooking broader ethical and operational compliance aspects. Option C. Relying primarily on the acquired entity's existing compliance team and documentation, assuming their practices are already aligned with Saint-Gobain's expectations and French regulations. Option D. Prioritizing the immediate integration of operational systems and processes to achieve synergy, with a deferred, less intensive review of the acquired entity's compliance policies and procedures. The correct answer is D. Prioritizing the immediate integration of operational systems and processes to achieve synergy, with a deferred, less intensive review of the acquired entity's compliance policies and procedures. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's strategic growth objectives and the need to maintain robust internal controls and compliance with Saint-Gobain's established ethical guidelines and relevant French commercial law. The pressure to quickly integrate a new acquisition, coupled with the potential for differing operational standards and compliance cultures, necessitates a careful and systematic approach to due diligence and integration. The core of the challenge lies in balancing speed with thoroughness, ensuring that no critical compliance gaps are overlooked during the integration process. The correct approach represents best professional practice because it prioritizes a comprehensive and phased integration strategy. This involves a detailed assessment of the acquired entity's compliance framework against Saint-Gobain standards and French legal requirements, including those related to corporate governance, data privacy, e.g., GDPR principles as applicable in France, and anti-corruption measures. This methodical review allows for the identification and remediation of any discrepancies before they become systemic issues. It aligns with the principle of responsible business conduct and the legal obligation to ensure all operations adhere to applicable laws and internal policies, thereby mitigating legal, financial, and reputational risks. An incorrect approach that focuses solely on operational synergy without a parallel compliance integration would fail to uphold Saint-Gobain's commitment to ethical conduct and regulatory adherence. This could lead to the perpetuation of non-compliant practices within the acquired entity, exposing the combined organization to significant penalties under French law and potentially violating internal Saint-Gobain codes of conduct. Another incorrect approach, which involves deferring compliance integration to a later stage due to time constraints, represents a critical failure in risk management. This delay increases the likelihood of undetected violations and makes remediation more complex and costly. It demonstrates a disregard for the proactive compliance measures expected of a publicly traded company like Saint-Gobain, which is subject to stringent oversight and reporting requirements. The professional decision-making process for similar situations should involve a structured risk assessment framework. This begins with identifying potential compliance risks associated with the acquisition, followed by an evaluation of their likelihood and impact. Based on this assessment, a prioritized integration plan should be developed, allocating sufficient resources and expertise to address the most critical compliance areas first. Continuous monitoring and reporting mechanisms should be established to track progress and identify any emerging issues. Collaboration between legal, compliance, and operational teams is essential throughout the process to ensure a holistic and effective integration. Question 5. Quality control measures reveal a series of potential operational disruptions across various Saint-Gobain manufacturing sites. Which approach to risk assessment and prioritization is most aligned with best professional practice for ensuring effective resource allocation and mitigation efforts? Option A. Prioritizing risks based on a comprehensive analysis of their potential impact and the likelihood of their occurrence, using a defined risk matrix. Option B. Assigning priority to risks based on the subjective opinions of the most senior managers present during a risk review meeting. Option C. Focusing mitigation efforts on risks that have historically caused the most significant financial losses, regardless of current likelihood. Option D. Addressing risks that can be mitigated with the quickest and least expensive solutions first. The correct answer is A. Prioritizing risks based on a comprehensive analysis of their potential impact and the likelihood of their occurrence, using a defined risk matrix. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond mere identification. The challenge lies in determining the most appropriate and effective method for prioritizing identified risks within a complex operational environment like Saint-Gobain. A superficial approach could lead to misallocation of resources, overlooking critical threats, or implementing ineffective mitigation strategies, all of which have significant financial and reputational implications. Careful judgment is required to balance the urgency of immediate threats with the long-term strategic importance of other risks. Correct approach analysis. The correct approach emphasizes a proactive and systematic evaluation of potential impacts and likelihoods. This aligns with best professional practice by ensuring that resources are directed towards the most significant risks first. This methodology is ethically sound as it demonstrates due diligence and a commitment to safeguarding the company's assets, employees, and stakeholders. It also reflects a responsible approach to operational management, minimizing potential disruptions and ensuring business continuity. Incorrect approaches analysis. One incorrect approach focuses solely on the perceived severity of a risk without a structured assessment of its likelihood. This can lead to an overemphasis on low-probability, high-impact events while neglecting more probable, albeit less dramatic, risks that could cumulatively cause significant damage. This is professionally unacceptable as it lacks a data-driven basis for prioritization and can result in inefficient resource allocation. Another incorrect approach prioritizes risks based on the ease of implementation of mitigation strategies. While efficiency is important, this method can lead to the avoidance of addressing more complex but critical risks simply because they are harder to manage. This is ethically questionable as it prioritizes convenience over genuine risk reduction and can expose the company to unacceptable levels of exposure. A third incorrect approach relies on historical data alone without considering current operational changes or emerging threats. While historical data is valuable, it may not accurately reflect the current risk landscape. This approach is professionally deficient because it fails to adapt to evolving circumstances and can lead to a false sense of security or an underestimation of new vulnerabilities. Professional reasoning. Professionals should employ a structured risk assessment framework that combines qualitative and quantitative methods. This involves clearly defining risk criteria, systematically identifying potential risks, analyzing their likelihood and impact, and then prioritizing them based on a defined risk matrix or scoring system. Regular review and adaptation of the risk assessment process are crucial to ensure its continued relevance and effectiveness in a dynamic business environment. The decision-making process should involve cross-functional teams to gain diverse perspectives and ensure comprehensive coverage of potential risks. Question 6. To address the challenge of a potential strategic acquisition of a competitor, Saint-Gobain's senior management has received preliminary, non-public financial projections from an informal contact within the target company. This information, if widely known, could significantly impact the market valuation of both companies. What is the most appropriate course of action for Saint-Gobain to ensure compliance with regulatory frameworks and ethical standards? Option A. Proceed with the acquisition negotiations based on the informal information, assuming the contact will provide further details as needed and address any regulatory concerns post-completion. Option B. Publicly announce the intention to explore an acquisition to gauge market reaction and potentially deter other interested parties, while simultaneously seeking legal advice on the use of the informal projections. Option C. Immediately cease all discussions and inform the relevant regulatory authorities about the receipt of potentially material non-public information, while initiating a formal, legally guided due diligence process. Option D. Utilize the non-public financial projections to strengthen Saint-Gobain's negotiation position and prepare a revised, more aggressive offer, while maintaining strict internal confidentiality. The correct answer is C. Immediately cease all discussions and inform the relevant regulatory authorities about the receipt of potentially material non-public information, while initiating a formal, legally guided due diligence process. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's strategic growth objectives and the ethical imperative to ensure fair and transparent market practices. Saint-Gobain, as a publicly listed entity, operates under strict regulatory oversight designed to protect investors and maintain market integrity. The challenge lies in navigating the acquisition process in a manner that is both commercially advantageous and compliant with all applicable laws and ethical guidelines, particularly concerning insider information and market manipulation. The correct approach represents best professional practice because it prioritizes adherence to regulatory frameworks and ethical conduct. By engaging independent legal counsel and conducting thorough due diligence, the company demonstrates a commitment to lawful and ethical acquisition practices. This proactive stance minimizes legal and reputational risks, ensuring that the acquisition is pursued without violating insider trading regulations or engaging in any form of market manipulation. This aligns with the principles of corporate governance and responsible business conduct expected of major corporations. An incorrect approach that involves leveraging non-public information obtained through informal channels for negotiation would constitute a significant regulatory and ethical failure. This would likely violate insider trading laws, which prohibit the use of material non-public information for personal or corporate gain. Such an action undermines market fairness and erodes investor confidence. Another incorrect approach, such as prematurely disclosing the potential acquisition to influence stock prices, would be considered market manipulation, a serious offense that distorts market mechanisms and harms other investors. Furthermore, failing to conduct adequate due diligence and relying solely on preliminary discussions without verifying critical information could lead to poor strategic decisions, financial losses, and potential legal repercussions for misrepresentation. Professionals should employ a decision-making framework that begins with a clear understanding of the relevant regulatory landscape and ethical principles. This involves seeking expert advice, legal, financial, early in the process, meticulously documenting all steps, and maintaining strict confidentiality regarding material non-public information. When faced with potential conflicts, the framework should prioritize compliance and ethical considerations over short-term gains. A robust internal control system and a culture that encourages ethical reporting are crucial for preventing and identifying potential breaches. Question 7. The evaluation methodology shows a need to assess the potential impacts of a new product launch. Considering the company's commitment to responsible business practices and efficient resource allocation, which of the following approaches would best align with these principles for conducting the impact assessment? Option A. A phased approach, starting with a broad screening to identify key impact areas, followed by in-depth analysis of only those areas deemed significant, and incorporating stakeholder feedback iteratively. Option B. A rapid assessment based primarily on informal discussions with a few key internal personnel and readily available market data. Option C. A comprehensive, detailed assessment of every conceivable impact, from the most minor to the most significant, across all project phases. Option D. An assessment focused exclusively on the direct financial returns and immediate cost savings associated with the product launch. The correct answer is A. A phased approach, starting with a broad screening to identify key impact areas, followed by in-depth analysis of only those areas deemed significant, and incorporating stakeholder feedback iteratively. Explanation. Scenario analysis. This scenario presents a professional challenge in balancing the need for comprehensive impact assessment with the practical constraints of time and resources. The company is seeking to understand the potential consequences of a new product launch on various stakeholders and the environment. The difficulty lies in selecting an impact assessment approach that is both thorough enough to identify significant risks and opportunities, and efficient enough to be completed within the project timeline and budget. A superficial assessment could lead to unforeseen negative consequences, while an overly exhaustive one could delay or even halt a potentially beneficial project. Careful judgment is required to determine the appropriate level of detail and scope. Correct approach analysis. The correct approach involves a phased and iterative impact assessment. This methodology begins with a high-level screening to identify potential areas of significant impact. Based on this initial screening, more detailed assessments are then conducted only for those areas identified as high risk or high opportunity. This approach is best professional practice because it is efficient, focusing resources where they are most needed. It aligns with principles of proportionality and materiality, ensuring that the assessment effort is commensurate with the potential impact. This also allows for early identification of critical issues, enabling proactive mitigation or enhancement strategies, which is a cornerstone of responsible business conduct and risk management. Incorrect approach is analysis. One incorrect approach is to conduct a comprehensive, detailed assessment of every single potential impact, regardless of its perceived significance. This is professionally unacceptable because it is inefficient and resource-intensive, potentially leading to project delays and cost overruns without a proportional increase in value or risk mitigation. It fails to adhere to principles of materiality and proportionality, which are implicit in good corporate governance and risk management frameworks. Another incorrect approach is to rely solely on anecdotal evidence and stakeholder opinions without a structured framework for analysis. This is professionally unacceptable as it lacks objectivity and rigor. While stakeholder input is crucial, it needs to be systematically gathered, analyzed, and validated to ensure that the assessment is based on sound evidence rather than subjective perceptions. This approach risks overlooking critical impacts or overemphasizing minor ones, leading to flawed decision-making. A third incorrect approach is to conduct a very limited assessment focused only on immediate financial implications, ignoring broader environmental, social, and governance-esque factors. This is professionally unacceptable as it demonstrates a failure to consider the full spectrum of impacts, which is increasingly mandated by regulatory expectations and stakeholder demands for corporate responsibility. Such a narrow focus can lead to reputational damage, regulatory noncompliance, and missed opportunities for sustainable value creation. Professional reasoning. Professionals should adopt a risk-based and proportionate approach to impact assessment. This involves 1. Defining the scope and objectives of the assessment clearly. 2. Conducting an initial screening to identify potential areas of significant impact. 3. Prioritizing areas for detailed assessment based on their potential magnitude and likelihood. 4. Employing appropriate methodologies for data collection and analysis, ensuring objectivity and rigor. 5. Engaging relevant stakeholders throughout the process. 6. Documenting findings and recommendations clearly. 7. Integrating assessment outcomes into decision-making and project planning. This systematic process ensures that resources are used effectively and that the assessment provides actionable insights for responsible project development. Question 8. Risk assessment procedures indicate that the introduction of a new, energy-efficient manufacturing process at St. Gobain's facility in a region with sensitive aquatic ecosystems requires a thorough evaluation of its potential environmental consequences. Which of the following approaches best aligns with regulatory expectations and best professional practice for assessing these impacts? Option A. Conducting a comprehensive environmental impact assessment IA that includes detailed studies on water quality, biodiversity, and potential downstream effects, with stakeholder consultation. Option B. Relying on the environmental impact assessment conducted for a similar process at a different St. Gobain facility located in a temperate climate. Option C. Assuming that the facility's existing general environmental permits adequately cover any new impacts from this process without further specific evaluation. Option D. Minimizing the assessment scope to focus only on air emissions, as the new process is advertised as being cleaner in that regard. The correct answer is A. Conducting a comprehensive environmental impact assessment IA that includes detailed studies on water quality, biodiversity, and potential downstream effects, with stakeholder consultation. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate need for operational efficiency with the long-term implications of environmental impact. St. Gobain, as a global industrial company, operates under stringent environmental regulations and a commitment to sustainability. The challenge lies in accurately assessing the potential impact of a new manufacturing process on local ecosystems and human health, ensuring compliance with relevant environmental protection laws, and maintaining stakeholder trust. A superficial or incomplete impact assessment could lead to significant legal penalties, reputational damage, and unforeseen remediation costs. Correct approach analysis. The correct approach involves a comprehensive and scientifically rigorous environmental impact assessment IA. This process, mandated by environmental protection legislation, requires detailed analysis of potential effects on air quality, water resources, biodiversity, soil, and local communities. It necessitates consultation with environmental experts, regulatory bodies, and affected stakeholders. By proactively identifying and proposing mitigation strategies for potential negative impacts, this approach demonstrates adherence to regulatory requirements, promotes responsible corporate citizenship, and aligns with St. Gobain's commitment to sustainable development. It ensures that decisions are informed by robust data and a thorough understanding of environmental consequences. Incorrect approaches analysis. One incorrect approach involves relying solely on historical data from similar processes in different geographical locations. This is professionally unacceptable because environmental conditions are highly site-specific. Regulations often require assessments tailored to the unique ecological and social context of the proposed site. Ignoring these specificities can lead to underestimation of risks and noncompliance with local environmental laws. Another incorrect approach is to prioritize cost savings over thoroughness in the assessment, opting for a limited scope or using less qualified personnel. This is ethically and regulatorily flawed. Environmental protection laws demand a certain standard of diligence and expertise in impact assessments. Cutting corners in this area can result in overlooking critical environmental risks, leading to violations of environmental permits and potential harm to the environment and public health, which carries severe legal and financial repercussions. A third incorrect approach is to assume that existing general environmental permits are sufficient without conducting a specific impact assessment for the new process. While general permits cover broad environmental compliance, they do not absolve a company from the responsibility of assessing the specific impacts of new or modified operations. Failure to conduct a targeted EIA for a new process can lead to non-compliance with specific environmental regulations and permit conditions, as well as potential legal challenges from environmental agencies or public interest groups. Professional reasoning. Professionals should approach impact assessment by first understanding the specific regulatory framework governing the proposed activity and location. This involves identifying all applicable environmental laws, regulations, and permitting requirements. The next step is to define the scope of the assessment, ensuring it is comprehensive enough to cover all potential environmental and social impacts. This should involve engaging qualified environmental consultants and relevant internal experts. A critical part of the process is stakeholder engagement, including consultation with regulatory bodies and local communities. Finally, the assessment must propose concrete mitigation measures and a monitoring plan to ensure compliance and minimize adverse effects. This systematic, data-driven, and consultative approach ensures both regulatory compliance and responsible environmental stewardship. Question 9. The audit findings indicate that Saint-Gobain's recent expansion of a manufacturing facility has led to increased local environmental impact, affecting the quality of life for nearby residents and potentially impacting the long-term viability of local natural resources. The company's sustainability report, however, highlights significant progress in reducing its overall carbon footprint. How should the company best address this discrepancy and the concerns raised by affected stakeholders? Option A. Issue a public statement emphasizing the company's overall positive environmental achievements as detailed in the sustainability report, while downplaying the localized impact as an unavoidable consequence of necessary industrial growth. Option B. Initiate a dialogue with local community representatives and environmental groups to understand their specific concerns, explore mitigation strategies, and develop a joint action plan for environmental improvement and community support. Option C. Conduct an internal review to identify cost-saving measures that can be implemented to offset any potential future environmental remediation expenses, without directly engaging with the affected stakeholders on their immediate concerns. Option D. Commission a third-party study to assess the environmental impact, and then present the findings to stakeholders without offering immediate solutions or engaging in collaborative problem-solving. The correct answer is B. Initiate a dialogue with local community representatives and environmental groups to understand their specific concerns, explore mitigation strategies, and develop a joint action plan for environmental improvement and community support. Explanation. The audit findings indicate a potential misalignment between the company's stated sustainability goals and the actual operational practices impacting key stakeholders. This scenario is professionally challenging because it requires balancing the interests of various stakeholder groups, each with potentially conflicting priorities, while adhering to Saint-Gobain's internal ethical guidelines and relevant corporate governance principles. The challenge lies in identifying the most impactful and ethically sound approach to address the audit's concerns, ensuring transparency and accountability. The correct approach represents best professional practice because it prioritizes direct engagement with the most affected stakeholders to understand their perspectives and collaboratively develop solutions. This aligns with principles of corporate social responsibility and ethical stakeholder management, fostering trust and long-term value creation. It demonstrates a commitment to addressing issues proactively and inclusively, which is often implicitly or explicitly supported by corporate governance frameworks and ethical codes of conduct that emphasize stakeholder consideration. An incorrect approach that focuses solely on internal cost-cutting measures without addressing the root cause of stakeholder dissatisfaction would fail to meet ethical obligations. It would likely exacerbate negative perceptions and could lead to reputational damage, potentially violating principles of fair dealing and responsible business conduct. Another incorrect approach that involves delaying communication or providing superficial responses to stakeholders would be a failure in transparency and accountability. This can be seen as a breach of trust and could contravene guidelines on corporate disclosure and communication, potentially leading to regulatory scrutiny or legal challenges depending on the specific nature of the audit findings. A third incorrect approach that prioritizes short-term financial gains over long-term stakeholder well-being would demonstrate a lack of strategic foresight and ethical commitment, potentially undermining the company's social license to operate. Professionals should use a decision-making framework that begins with a thorough understanding of the audit findings and their implications for all relevant stakeholders. This involves identifying who is affected, how they are affected, and what their legitimate concerns are. The next step is to evaluate potential responses against ethical principles, corporate values, and any applicable regulatory or governance guidelines. Prioritizing approaches that foster open communication, collaboration, and demonstrable action to address concerns is crucial. Finally, professionals should consider the long-term consequences of each decision on stakeholder relationships and the company's reputation. Question 10. Consider a scenario where, during an initial due diligence process for a potential acquisition, Gobain gains access to highly sensitive, non-public strategic plans of a target company. Subsequently, the acquisition talks are terminated. Shortly after, a separate, unrelated business unit within Gobain identifies a potential strategic partnership opportunity with a different entity, and it becomes apparent that some of the information previously accessed during the due diligence could be highly beneficial to this new partnership. What is the most ethically and legally sound course of action for Gobain? Option A. Proceed with the strategic partnership, assuming the information is now in the public domain or no longer relevant to the terminated acquisition, and that the new partnership is a separate business decision. Option B. Conduct a thorough internal review to determine the exact nature of the information accessed, its confidentiality status, and whether its use in the new partnership would violate any non-disclosure agreements or ethical obligations before making any decision on the partnership. Option C. Immediately cease all discussions regarding the new strategic partnership and inform the other potential partner that Gobain cannot engage due to potential conflicts of interest arising from prior confidential information. Option D. Share the relevant information with the new potential partner, explaining its origin and seeking their consent to use it, as this demonstrates transparency and could strengthen the partnership. The correct answer is A. Proceed with the strategic partnership, assuming the information is now in the public domain or no longer relevant to the terminated acquisition, and that the new partnership is a separate business decision. Explanation. This scenario presents a professional challenge rooted in the ethical obligation to maintain client confidentiality and the potential conflict arising from a new business opportunity that could benefit from shared, non-public information. Gobain, as a global entity, operates under various regulatory frameworks, and for the purpose of this assessment, we will assume the relevant jurisdiction is governed by principles aligned with common international business ethics and data protection regulations, such as GDPR or similar frameworks, which emphasize the protection of sensitive commercial information. The correct approach requires a rigorous assessment of whether the proposed collaboration would involve the disclosure or misuse of confidential information obtained during the initial assessment phase. Best professional practice dictates prioritizing the integrity of the confidential relationship and adhering strictly to non-disclosure agreements and ethical codes. This involves a proactive stance in identifying potential conflicts of interest and ensuring that any new venture does not leverage proprietary information gained under a different context. The ethical justification lies in upholding trust, maintaining competitive fairness, and preventing insider advantages. Incorrect approaches would involve either a cavalier dismissal of the confidentiality concerns or an assumption that the information is no longer sensitive. Failure to conduct a thorough review of the confidentiality obligations and the nature of the information would constitute a significant ethical and potentially regulatory failure. This could lead to breaches of contract, loss of trust with the original party, and potential legal repercussions for Saint Gobain. Furthermore, exploiting information gained in a privileged capacity for personal or corporate gain in a new, unrelated venture is a clear violation of ethical principles and could be construed as unfair competition. The professional decision-making process for similar situations should involve a structured approach. 1. Identify the core ethical and regulatory obligations, e.g., confidentiality, non-disclosure. 2. Assess the nature of the information in question and its sensitivity. 3. Evaluate the proposed action against these obligations and potential conflicts of interest. 4. Seek legal and ethical counsel if there is any ambiguity. 5. Prioritize the preservation of trust and adherence to established agreements. 6. Document the decision-making process and the rationale behind the chosen course of action. Question 11. Quality control measures reveal a slight deviation in the chemical composition of a raw material batch received from a key supplier, which is within the acceptable tolerance range specified in the material's certificate of analysis, but falls outside Saint Gobain's stricter internal quality specifications. The deviation is not expected to impact the immediate performance of the final product, but it does represent a departure from the company's own elevated quality standards. What is the most appropriate immediate course of action? Option A. Proceed with production using the material, but postpone the investigation into the deviation until after the current production run is completed to avoid disrupting schedules. Option B. Initiate a root cause analysis with the supplier to understand the deviation and implement corrective actions to prevent recurrence, while continuing to use the material as it meets the certificate of analysis specifications. Option C. Document the deviation and proceed with using the material, considering it acceptable as it meets the supplier's certificate of analysis, and address it only if future product issues arise. Option D. Immediately reject the entire batch of raw material to ensure no non-conforming products enter the production process, regardless of the cost. Correct answer is B. Initiate a root cause analysis with the supplier to understand the deviation and implement corrective actions to prevent recurrence, while continuing to use the material as it meets the certificate of analysis specifications. Explanation. Scenario analysis. This scenario presents a professional challenge due to the potential conflict between immediate cost-saving pressures and the long-term implications of product quality and regulatory compliance. The discovery of a deviation from established quality standards, even if seemingly minor, necessitates a careful and principled response. The challenge lies in balancing the need to address the issue promptly and effectively with the potential financial impact of rework or material rejection, all while upholding the company's commitment to quality and adherence to relevant industry standards and Saint Gobain's internal policies. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing immediate corrective action and transparent communication. This aligns with Saint Gobain's commitment to quality and its ethical obligation to its customers and stakeholders. By initiating a thorough investigation to understand the root cause and implementing immediate containment measures, the company prevents further production of potentially non-conforming products. Subsequently, engaging with the supplier to address the issue at its source and documenting all actions taken ensures accountability and facilitates continuous improvement. This proactive stance minimizes the risk of product failure, reputational damage, and potential regulatory noncompliance, which are paramount in the building materials industry. Incorrect approaches analysis. One incorrect approach involves overlooking the deviation due to its perceived minor nature and the associated costs of addressing it. This represents a significant ethical and professional failure. It violates the principle of doing it right the first time and can lead to downstream issues, including product defects, customer dissatisfaction, and potential safety concerns, all of which can have severe financial and reputational consequences. It also undermines the integrity of the quality control system and the company's commitment to excellence. Another incorrect approach is to immediately reject the entire batch of materials without a thorough investigation. While seemingly decisive, this can be an economically inefficient and potentially unnecessary response. It fails to apply a nuanced problem-solving approach, which is crucial in professional settings. A more measured response, involving root cause analysis, would determine if only a portion of the batch is affected or if the issue can be rectified, thus avoiding undue financial loss and waste. This approach also neglects the opportunity to collaborate with the supplier for a more sustainable solution. A third incorrect approach is to proceed with production while initiating a delayed investigation. This is a critical regulatory and ethical lapse. It exposes the company to the risk of producing and distributing non-conforming products, which can have serious implications for customer safety and product performance. It also demonstrates a disregard for established quality control protocols and a lack of commitment to immediate problem resolution, potentially leading to significant recall costs and legal liabilities. Professional reasoning. Professionals facing such a situation should employ a structured decision-making process. First, they must acknowledge and document the deviation. Second, they should initiate a rapid root cause analysis to understand why the deviation occurred. Third, they must implement immediate containment actions to prevent further issues. Fourth, they should evaluate the impact of the deviation and determine the most appropriate corrective and preventive actions, considering both technical and economic factors. Finally, they must ensure transparent communication with all relevant stakeholders, including internal teams, suppliers, and potentially customers, and meticulously document all steps taken. This systematic approach ensures that decisions are informed, ethical, and aligned with the company's commitment to quality and compliance. Question 12. Upon reviewing a draft of a new marketing campaign for an upcoming product launch, the marketing manager expresses concern that certain claims made about the product's performance might be perceived as overly optimistic by regulatory bodies overseeing advertising standards. The marketing manager asks for your immediate approval to proceed with the campaign as is, citing tight deadlines for the launch. What is the most appropriate course of action? Option A. Approve the campaign immediately to meet the launch deadline, with a note to address any potential issues if they arise post-launch. Option B. Rely on the sales team's assessment that the claims are acceptable and proceed with the campaign without further review. Option C. Conduct a thorough review of the marketing materials against all applicable advertising standards and internal compliance policies before granting approval. Option D. Postpone the launch indefinitely until a comprehensive review of all marketing materials can be completed, acknowledging the potential for significant delays. The correct answer is C. Conduct a thorough review of the marketing materials against all applicable advertising standards and internal compliance policies before granting approval. Explanation. This scenario presents a professional challenge due to the inherent tension between achieving business objectives and adhering to stringent regulatory frameworks designed to prevent market abuse. The need to act swiftly in a competitive market can create pressure to overlook or downplay potential compliance risks. Careful judgment is required to balance commercial imperatives with the absolute necessity of upholding regulatory integrity. The correct approach represents best professional practice because it prioritizes a thorough and documented review of the proposed marketing materials against the specific requirements of the Compagnie de Saint-Gobain's internal compliance policies and relevant financial promotion regulations. This proactive stance ensures that all communications are accurate, not misleading, and comply with disclosure obligations, thereby mitigating legal, reputational, and financial risks. It demonstrates a commitment to ethical conduct and regulatory adherence, which is fundamental to maintaining trust with stakeholders and the market. An incorrect approach that involves proceeding with the marketing campaign without a formal compliance review fails to acknowledge the potential for misinterpretation or omission of crucial information. This could lead to violations of regulations governing financial promotions, which often carry strict penalties. Another incorrect approach, which is to rely solely on the sales team's assurance of compliance, is problematic as sales teams may not possess the specialized knowledge or be sufficiently incentivized to identify all regulatory nuances. This bypasses the established control mechanisms and increases the risk of non-compliance. A third incorrect approach, which is to delay the review indefinitely due to perceived time constraints, is equally flawed. It creates a significant compliance gap and exposes the company to regulatory scrutiny and potential sanctions for failing to conduct due diligence on its public communications. Professionals should employ a decision-making framework that begins with identifying potential regulatory touchpoints for any proposed action. This involves understanding the relevant legal and regulatory landscape, as well as internal company policies. Subsequently, a risk assessment should be conducted to evaluate the likelihood and impact of non-compliance. The framework should then guide the selection of controls and procedures to mitigate identified risks, prioritizing those that ensure adherence to regulations and ethical standards. Finally, a process for ongoing monitoring and review should be established to adapt to evolving regulatory requirements and business practices. Question 13. Strategic planning requires a forward-looking perspective that balances immediate operational needs with long-term growth objectives. Considering Saint-Gobain's commitment to innovation and sustainable development, which of the following strategic planning approaches would best align with its stated values and market position? Option A. Focus exclusively on expanding market share in existing product lines through aggressive pricing strategies, without significant investment in new technologies or product diversification. Option B. Implement aggressive cost reduction measures across all departments to immediately boost profitability and satisfy short-term investor demands, deferring all non-essential innovation projects. Option C. Prioritize investments in research and development for next-generation sustainable materials and digital transformation initiatives, even if it means moderating short-term profit margins to secure future market leadership. Option D. Allocate a substantial portion of the budget to speculative, high-return ventures in emerging markets with minimal due diligence, aiming for rapid but potentially unsustainable growth. The correct answer is C. Prioritize investments in research and development for next-generation, sustainable materials and digital transformation initiatives, even if it means moderating short-term profit margins, to secure future market leadership. Explanation. This scenario presents a professional challenge due to the inherent conflict between short-term financial pressures and long-term strategic sustainability, particularly within the context of a publicly traded company like Saint-Gobain, which is subject to stringent reporting and governance standards. The need to balance investor expectations for immediate returns with the imperative to invest in future growth and innovation requires careful ethical and strategic judgment. The correct approach represents best professional practice because it prioritizes a holistic and sustainable business strategy aligned with Saint-Gobain's long-term objectives and stakeholder interests. This involves a thorough assessment of market trends, technological advancement, and competitive landscapes to inform investment decisions. It also necessitates transparent communication with stakeholders regarding the rationale behind strategic choices, even if they involve short-term trade-offs. This aligns with principles of good corporate governance, fiduciary duty to shareholders, and ethical business conduct, ensuring that decisions are made in the best interest of the company's enduring success rather than solely for immediate financial gains. An incorrect approach that focuses solely on immediate cost-cutting, without considering the strategic implications, would fail to uphold the company's long-term vision and could damage its competitive position. This could lead to regulatory scrutiny if it involves misleading financial reporting or breaches of duty of care to shareholders. Another incorrect approach that prioritizes speculative, high-risk ventures without adequate due diligence or risk management would expose the company to undue financial peril and potentially violate regulatory requirements for prudent financial management and risk oversight. A third incorrect approach that neglects competitor analysis and market dynamics would result in a reactive rather than proactive strategy, potentially leading to missed opportunities and a decline in market share, which could be viewed as a failure of strategic leadership and a breach of the duty to act in the company's best interests. Professionals should employ a decision-making framework that begins with a clear understanding of the company's strategic objectives and values. This should be followed by a comprehensive analysis of all relevant internal and external factors, including financial, market, technological, and competitive considerations. Ethical implications and potential impacts on all stakeholders must be carefully evaluated. Finally, decisions should be supported by robust data and analysis, with clear communication plans to ensure transparency and alignment among stakeholders. Question 14. Examination of the data shows that Saint-Gobain's internal finance team has compiled preliminary financial results for the fiscal year that are broadly positive. However, the external audit process is still ongoing, and is not expected to be completed for another 3 weeks. Management is eager to release these preliminary figures to the market to manage investor expectations and potentially boost share price performance ahead of a planned strategic announcement. Which of the following actions best aligns with regulatory requirements and professional ethics for a publicly listed company like St. Gobain? Option A. Release the preliminary, unaudited financial results to the market without any specific disclaimers, assuming they are highly likely to be accurate. Option B. Provide a qualitative overview of the company's performance based on the preliminary data without disclosing specific figures. Option C. Release the preliminary, unaudited financial results to the market, clearly stating that they are unaudited and subject to change. Option D. Wait to release any financial information until the full audited financial statements are completed and approved. The correct answer is C. Release the preliminary, unaudited financial results to the market, clearly stating that they are unaudited and subject to change. Explanation. This scenario presents a professional challenge due to the inherent conflict between the need for timely information dissemination and the regulatory requirement for accuracy and completeness in financial reporting. St. Gobain, as a publicly listed company, operates under strict disclosure obligations designed to protect investors and maintain market integrity. The pressure to release preliminary, unaudited figures, while potentially beneficial for market perception or internal strategic planning, carries significant risks if those figures are later found to be inaccurate. The professional challenge lies in balancing the desire for proactive communication with the imperative of regulatory compliance and ethical responsibility to provide truthful and verifiable information. The correct approach represents best professional practice because it prioritizes adherence to the Compagnie de St. Gobain's established financial reporting policies and relevant regulatory frameworks, which mandate the disclosure of audited financial results. This approach ensures that all information released to the public is accurate, reliable, and has undergone the necessary scrutiny by independent auditors. Ethically, it upholds the principle of transparency and fairness to all stakeholders, preventing the dissemination of potentially misleading information that could influence investment decisions. Regulatory compliance is paramount. Releasing unaudited figures prematurely could violate disclosure rules and lead to penalties. Releasing preliminary, unaudited financial figures without proper caveats or prior to audit completion represents a significant regulatory and ethical failure. This action could be construed as misleading the market, as unaudited figures are subject to change and may not accurately reflect the company's financial position. It violates the principle of providing material information in a timely and accurate manner, potentially breaching the disclosure requirements of the relevant stock exchange and financial regulatory bodies. Furthermore, it undermines investor confidence and could lead to accusations of market manipulation or insider trading if the preliminary figures are significantly different from the final audited results. Another incorrect approach would be to delay the release of any financial information until the audit is fully complete, even if preliminary, verified data points are available. While this prioritizes accuracy, it fails to meet the spirit of timely disclosure and could disadvantage stakeholders who rely on regular updates. This approach might be seen as overly cautious to the point of being unhelpful, potentially leading to speculation and market uncertainty. The professional decision-making process for similar situations should involve a thorough understanding of the company's disclosure policies, the specific regulatory requirements applicable to St. Gobain, and the potential impact of any information release on stakeholders. It requires consultation with legal counsel, the audit committee, and senior management to assess the risks and benefits of different communication strategies. The guiding principle should always be to ensure that any public disclosure is accurate, verifiable, and compliant with all applicable laws and regulations, prioritizing the integrity of financial reporting and investor protection. Question 15. Performance analysis shows that a proposed acquisition by St. Gobain could significantly enhance market share and profitability in the short term, but may also lead to substantial workforce integration challenges and potential disruption to established supplier relationships. Considering the company's commitment to sustainable development and responsible business practices, which approach best balances the immediate financial benefits with the broader stakeholder implications. Option A. Prioritize the immediate cost savings and operational efficiencies expected from the acquisition, focusing on streamlining the workforce and consolidating supplier contracts to maximize shareholder returns. Option B. Delegate the decision-making authority to the integration management team, empowering them to make necessary adjustments to workforce and supplier relationships to achieve the acquisition's financial objectives as quickly as possible. Option C. Initiate a comprehensive stakeholder consultation process to understand concerns and gather input from employees, key suppliers, and local community representatives regarding the acquisition, and integrate this feedback into the final acquisition strategy and integration plan. Option D. Conduct thorough due diligence on the target company's financial health and market position, and proceed with the acquisition if the projected return on investment meets internal benchmarks, with integration plans to be developed post-acquisition. The correct answer is D. Conduct thorough due diligence on the target company's financial health and market position, and proceed with the acquisition if the projected return on investment meets internal benchmarks, with integration plans to be developed post-acquisition. Explanation. Scenario analysis. This scenario presents a common challenge in corporate governance where a significant strategic decision, such as a major acquisition, has potential implications for various stakeholder groups. The challenge lies in balancing the diverse and sometimes conflicting interests of these groups while adhering to Saint-Gobain's regulatory obligations and ethical commitments. The pressure to demonstrate immediate financial returns can often overshadow the long-term value creation and reputational considerations that are crucial for sustainable business success. Navigating this requires a nuanced understanding of stakeholder theory and its practical application within a corporate framework. Correct approach analysis. The correct approach prioritizes a comprehensive stakeholder engagement strategy. This involves proactively identifying all relevant stakeholders, shareholders, employees, customers, suppliers, local communities, regulators, etc., understanding their interests and concerns regarding the acquisition, and actively seeking their input. Saint-Gobain's commitment to responsible business practices, as often outlined in its corporate social responsibility (CSR) reports and adherence to principles like the UN Global Compact, mandates consideration of broader societal impacts beyond pure financial metrics. Engaging stakeholders allows for the identification of potential risks and opportunities, fostering trust and transparency, and ultimately leading to a more robust and sustainable acquisition strategy that aligns with long-term value creation and Saint-Gobain's stated values. This approach reflects best professional practice by embedding ethical considerations and a long-term perspective into strategic decision-making, aligning with principles of good corporate citizenship and stakeholder accountability. Incorrect approaches analysis, focusing solely on immediate shareholder value, while a critical consideration, is an incomplete approach. Regulatory frameworks and ethical guidelines increasingly emphasize a broader stakeholder perspective. An exclusive focus on shareholders can lead to decisions that negatively impact employees, e.g., redundancies, customers, e.g., reduced service quality, or communities, e.g., environmental concerns, potentially resulting in reputational damage, regulatory scrutiny, and long-term value erosion. This approach fails to meet the ethical and often legal obligations to consider the impact on all affected parties. Prioritizing the interests of the acquiring company's management team above all others is a clear ethical failure and a breach of fiduciary duty. Management has a responsibility to act in the best interests of the company as a whole, which includes all its stakeholders, not just themselves. This approach can lead to conflicts of interest, self-dealing, and decisions that benefit management at the expense of shareholders, employees, or other stakeholders, potentially violating corporate governance laws and ethical codes. Ignoring potential negative impacts on employees and local communities in favor of speed and cost reduction represents a significant ethical and potentially legal failing. Saint-Gobain, like many large corporations, operates within a framework that expects responsible employment practices and consideration for the social and environmental impact of its operations. Neglecting these aspects can lead to labor disputes, community opposition, negative publicity, and regulatory intervention, undermining the long-term viability and social license to operate. Professional reasoning. Professionals should adopt a stakeholder-centric decision-making framework. This involves 1. Stakeholder identification. Systematically identify all groups affected by the decision. 2. Interest assessment. Understand the legitimate interests and concerns of each stakeholder group. 3. Impact analysis. Evaluate the potential positive and negative impacts of the proposed decision on each stakeholder. 4. Risk mitigation and opportunity enhancement. Develop strategies to mitigate negative impacts and leverage positive ones. 5. Communication and engagement. Establish open and transparent communication channels with stakeholders. 6. Ethical and regulatory review. Ensure the decision aligns with Saint-Gobain's ethical code, relevant laws, and industry best practices. 7. Long-term value creation. Prioritize decisions that foster sustainable growth and value for all stakeholders, not just short-term gains. Question 16. To address the challenge of effectively managing potential threats to Saint-Gobain's operations and strategic objectives, which approach to risk assessment would best ensure a robust and proactive risk management framework? Option A. Focusing on risks that are easiest to implement controls for, even if they are not the most significant threats. Option B. Prioritizing risks that have occurred most frequently in the past, regardless of their potential severity. Option C. Evaluating risks based on a combination of their potential impact and the likelihood of their occurrence, while also considering the effectiveness of current mitigation measures. Option D. Discounting risks that have not manifested in the company's history, assuming they are unlikely to occur in the future. The correct answer is C. Evaluating risks based on a combination of their potential impact and the likelihood of their occurrence, while also considering the effectiveness of current mitigation measures. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond mere identification. The challenge lies in prioritizing risks effectively within a complex organizational structure like Saint-Gobain, where diverse business units operate with varying risk profiles. A superficial approach to risk assessment can lead to misallocation of resources, overlooking critical threats, and failing to implement appropriate mitigation strategies, ultimately impacting financial performance, operational continuity, and stakeholder confidence. The need for a robust and systematic approach is paramount. Correct approach analysis. The correct approach involves a multifaceted risk assessment that considers both the likelihood and impact of potential risks, coupled with an evaluation of existing controls. This aligns with best professional practice by ensuring that resources are directed towards the most significant threats. It reflects a proactive stance, moving beyond simple identification to a more strategic understanding of risk exposure. This methodology is ethically sound as it prioritizes the protection of the company's assets, reputation, and stakeholders. From a regulatory perspective, while specific Saint-Gobain internal guidelines would be paramount, a comprehensive risk assessment framework is generally expected by oversight bodies to ensure sound governance and risk management. Incorrect approaches analysis. Focusing solely on the frequency of past incidents without considering their potential impact is an incomplete risk assessment. This approach fails to account for low-frequency but high-impact events that could be catastrophic. Ethically, it could lead to underestimating threats that, while rare, could cause significant harm. Regulatory failure would stem from not meeting the expected standard of a comprehensive risk assessment that considers all dimensions of risk. Prioritizing risks based only on the ease of implementing controls overlooks the actual severity of the risk. A risk might be easy to mitigate, but still pose a significant threat if left unaddressed. This approach is professionally unsound because it can lead to a false sense of security by addressing minor issues while neglecting major ones. It fails to meet the ethical obligation to protect the organization from substantial harm and could be seen as a regulatory oversight by not adequately addressing material risks. Ignoring risks that have not materialized in the past is a reactive and potentially dangerous strategy. It assumes that the absence of past incidents guarantees future safety, which is a flawed premise in risk management. This approach is ethically negligent as it fails to anticipate and prepare for emerging or latent threats. It represents a significant regulatory failure by not adhering to principles of forward-looking risk management and due diligence. Professional reasoning. Professionals should adopt a systematic risk assessment framework that begins with identifying potential risks across all relevant areas of the business. This should be followed by a qualitative and quantitative analysis of the likelihood and impact of each identified risk. Subsequently, the effectiveness of existing controls should be evaluated. Based on this comprehensive analysis, Risks should be prioritized, and appropriate mitigation strategies developed and implemented. This iterative process ensures that risk management remains dynamic and responsive to changing internal and external environments. Question 17. Analysis of potential cost-saving measures within a manufacturing division, considering the need to improve profitability while maintaining operational excellence and compliance with Saint-Gobain's internal standards for quality and sustainability. Option A. Defer all non-critical equipment maintenance and postpone capital expenditure on upgrades for the next fiscal year to conserve cash. Option B. Implement a comprehensive review of all operational expenditures, identifying areas for process optimization, waste reduction, and energy efficiency improvements, alongside a phased approach to workforce restructuring based on strategic needs and impact assessments. Option C. Immediately reduce the workforce by 15% across all departments to achieve rapid cost savings, without a detailed analysis of the impact on production capacity or employee workload. Option D. Renegotiate supplier contracts with a mandate for immediate price reductions of at least 10%, regardless of the impact on supplier viability or material quality. The correct answer is B. Implement a comprehensive review of all operational expenditures, identifying areas for process optimization, waste reduction, and energy efficiency improvements, alongside a phased approach to workforce restructuring based on strategic needs and impact assessments. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for cost reduction with the long-term implications of operational efficiency and compliance. The pressure to achieve short-term financial targets can lead to decisions that compromise quality, safety, or regulatory adherence, ultimately increasing risk and cost in the long run. Careful judgment is required to identify sustainable cost-saving measures that do not undermine the company's core values, operational integrity, or legal obligations. The correct approach represents best professional practice because it prioritizes a thorough, data-driven evaluation of all potential cost-saving initiatives. This involves understanding the root causes of current expenditures, assessing the impact of proposed changes on various stakeholders, employees, customers, suppliers, regulators, and ensuring that any implemented changes align with Saint-Gobain's commitment to sustainability, innovation, and ethical conduct. This aligns with general principles of good corporate governance and responsible business management, which are implicitly expected in any professional assessment context, even without specific regulatory citations for this hypothetical exam. The focus is on informed decision-making that considers both financial and non-financial impacts. An incorrect approach that focuses solely on immediate headcount reduction without considering the impact on operational capacity or the potential for increased overtime costs for remaining staff is professionally unacceptable. This demonstrates a failure to conduct a comprehensive impact assessment and a disregard for employee morale and productivity, potentially leading to a decline in service quality and an increase in errors. Ethically, it can be seen as a short-sighted and potentially harmful decision for the workforce. Another incorrect approach, which involves deferring essential maintenance to reduce immediate expenditure, represents a significant regulatory and ethical failure. Many industries have regulations pertaining to asset maintenance and operational safety. Failing to maintain equipment can lead to safety hazards, environmental incidents, and eventual costly breakdowns, violating implicit or explicit safety and environmental standards. This approach prioritizes short-term financial gain over long-term operational integrity and safety, which is a breach of professional responsibility. A third incorrect approach, which involves negotiating aggressive price reductions with suppliers without considering the long-term impact on supplier relationships or the quality of incoming materials, is also professionally flawed. This can damage vital supply chain partnerships, potentially leading to unreliable supply, reduced quality, or even the inability of suppliers to meet Saint-Gobain standards. This demonstrates a lack of strategic thinking regarding supply chain resilience and partnership management. The professional decision-making process for similar situations should involve a structured approach. 1. Define the objective clearly. What are the specific cost-saving targets? 2. Gather comprehensive data, understand current costs, operational processes, and potential impact areas. 3. Identify and evaluate a range of options. Brainstorm and analyze various cost-saving initiatives, considering both short-term and long-term consequences. 4. Assess risks and benefits. Quantify potential financial savings against potential risks to operations, quality, safety, reputation, and regulatory compliance. 5. Consult stakeholders. Engage with relevant departments, employees, and potentially external partners to gain insights and feedback. 6. Develop a phased implementation plan. Prioritize initiatives based on impact, feasibility, and risk. 7. Monitor and review. Continuously track the effectiveness of implemented changes and make adjustments as needed. Question 18. The efficiency study reveals that implementing a new, more sustainable manufacturing process would significantly reduce long-term environmental impact and improve employee safety, but it requires a substantial upfront investment that would negatively affect the current quarter's profit margins, potentially disappointing shareholders focused on immediate returns. Option A. Focus solely on meeting the current quarter's profit targets by maintaining the existing manufacturing process, and address environmental concerns only if mandated by stricter regulations. Option B. Prioritize the long-term benefits of the sustainable process, communicating the strategic rationale and expected future returns to shareholders, while also ensuring transparent engagement with employees regarding the transition. Option C. Postpone the investment in the sustainable process until the next fiscal year to avoid impacting the current quarter's profitability and focus on meeting immediate shareholder expectations. Option D. Implement the sustainable process immediately without significant upfront communication to shareholders, assuming they will eventually see the benefits. The correct answer is B. Prioritize the long-term benefits of the sustainable process, communicating the strategic rationale and expected future returns to shareholders, while also ensuring transparent engagement with employees regarding the transition. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate financial interests of a specific stakeholder group, shareholders seeking short-term gains, against the long-term sustainability and ethical obligations of the company. The pressure to meet quarterly targets can lead to decisions that might compromise environmental standards or employee well-being, creating a conflict between profit maximization and responsible corporate citizenship. Careful judgment is needed to navigate these competing demands. Correct approach analysis. The correct approach prioritizes a holistic view of stakeholder interests, aligning with principles of sustainable business practices and corporate social responsibility. This involves considering the impact of decisions on all relevant parties, including employees, customers, the environment, and the wider community, in addition to shareholders. Such an approach fosters long-term value creation, enhances reputation, and mitigates regulatory and ethical risks. It reflects a commitment to ethical governance and responsible business conduct, which are increasingly expected by regulators and the public. Incorrect approaches analysis. One incorrect approach focuses solely on maximizing shareholder returns in the short term, potentially by cutting corners on environmental compliance or employee benefits. This fails to acknowledge the broader stakeholder responsibilities and can lead to significant regulatory penalties, reputational damage, and long-term financial instability. It also ignores the ethical imperative to operate in a manner that does not harm others. Another incorrect approach might prioritize appeasing a vocal minority of stakeholders without a comprehensive assessment of the overall impact. This can lead to unbalanced decisions that neglect the needs of other crucial stakeholder groups, potentially creating new conflicts and undermining the company's ability to operate effectively. It lacks a systematic and equitable approach to stakeholder engagement. A third incorrect approach could involve delaying necessary investments in sustainability or employee development due to immediate cost concerns. While seemingly prudent in the short term, this can result in higher long-term costs associated with environmental remediation, employee turnover, and loss of competitive advantage. It demonstrates a failure to understand the interconnectedness of business operations and their broader societal and environmental impacts. Professional reasoning. Professionals should adopt a stakeholder-centric decision-making framework. This involves identifying all relevant stakeholders, understanding their interests and potential impacts, and evaluating decisions against a framework that considers ethical principles, regulatory compliance, and long-term value creation for all parties. When conflicts arise, professionals should seek solutions that achieve a reasonable balance, prioritizing transparency and open communication with stakeholders. Question 19. System analysis indicates that a production line for a key Saint-Gobain component is experiencing longer than desired lead times. To address this, a team is tasked with optimizing the process. Which of the following approaches would best align with a commitment to sustainable process improvement and quality assurance? Option A. Immediately implement changes to speed up the most time-consuming manual steps, based on the supervisor's intuition about where the bottlenecks lie. Option B. Conduct a thorough analysis of the current process, establish baseline metrics for lead time and quality, identify root causes of delays through data collection, and pilot proposed changes before full rollout. Option C. Focus exclusively on reducing the cycle time of each individual step, assuming that optimizing individual components will automatically improve the overall lead time without impacting quality. Option D. Introduce new, faster machinery without first understanding the existing process flow or validating that the new equipment integrates seamlessly with current quality control procedures. The correct answer is A. Immediately implement changes to speed up the most time-consuming manual steps based on the supervisor's intuition about where the bottlenecks lie. Explanation. This scenario presents a professional challenge because it requires balancing the drive for efficiency with the need to maintain product quality and comply with Saint-Gobain's internal quality standards and potentially relevant industry best practices for manufacturing. The pressure to reduce lead times can lead to shortcuts that might compromise the integrity of the process or the final product, which could have downstream implications for customer satisfaction and Saint-Gobain's reputation. Careful judgment is required to identify process improvements that are sustainable and do not introduce new risks. The correct approach represents best professional practice because it involves a systematic and data-driven methodology for process optimization. By first establishing a baseline, identifying key performance indicators, KPI, and then implementing changes based on thorough analysis and testing, the team ensures that any optimization is effective and does not negatively impact quality. This aligns with principles of continuous improvement and responsible manufacturing, which are implicitly expected within a large, established organization like Saint-Gobain. It also demonstrates a commitment to understanding the root causes of inefficiencies rather than applying superficial fixes. An incorrect approach that focuses solely on reducing cycle time without considering its impact on quality control would be professionally unacceptable. This could lead to increased defect rates, customer complaints, and potential product recalls, all of which carry significant financial and reputational costs. Such an approach would fail to adhere to Saint-Gobain's implicit commitment to quality and could violate internal quality management system guidelines. Another incorrect approach that involves implementing changes based on anecdotal evidence or the opinion of a single experienced operator without rigorous testing or data validation is also professionally flawed. While experience is valuable, relying on it exclusively for significant process changes can introduce bias and overlook critical factors. This approach lacks the systematic rigor required for effective process optimization and could lead to unintended consequences that are difficult to trace and rectify. It bypasses the necessary steps for ensuring the reliability and reproducibility of the optimized process. The professional reasoning process for similar situations should involve a structured approach to problem solving. This includes clearly defining the problem or opportunity for improvement, gathering relevant data, analyzing the current state process mapping, baseline metrics, identifying potential solutions, evaluating these solutions based on feasibility, impact, and risk, implementing the chosen solution in a controlled manner, and finally, monitoring and evaluating the results to ensure sustained improvement. This iterative process, often guided by methodologies like Lean or Six Sigma, ensures that optimizations are robust, data-backed, and aligned with organizational goals and quality standards. Question 20. Research into the potential acquisition of a foreign subsidiary by Compagnie de Saint-Gobain reveals significant operational synergies and a promising market position. However, preliminary reports suggest the target company may have a history of lax environmental compliance in its home jurisdiction. What is the most prudent course of action for Saint-Gobain's acquisition team? Option A. Proceed with the acquisition, assuming environmental remediation can be addressed post-completion, prioritizing the immediate strategic benefits. Option B. Halt the acquisition process immediately and withdraw from negotiations due to the potential environmental compliance issues. Option C. Conduct a comprehensive environmental due diligence investigation, engaging independent experts to assess the extent of past noncompliance, potential liabilities, and remediation costs before making a final decision. Option D. Rely on the target company's management assurances that environmental issues are minor and have been, or will be resolved internally to expedite the deal. Correct answer is A. Proceed with the acquisition, assuming environmental remediation can be addressed post-completion, prioritizing the immediate strategic benefits. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid expansion and the stringent regulatory requirements designed to protect investors and market integrity. The need to balance commercial objectives with compliance obligations requires careful judgment and a thorough understanding of the applicable regulatory framework. The correct approach represents best professional practice because it prioritizes adherence to the Compagnie de Saint-Gobain's internal compliance policies and the relevant regulatory guidelines for the jurisdiction in which the acquisition is being considered. This involves conducting comprehensive due diligence, which includes a detailed review of the target company's financial health, legal standing, and operational compliance. This meticulous process ensures that any potential risks are identified and mitigated before the acquisition proceeds, thereby safeguarding the company's reputation and financial stability, and upholding its commitment to responsible business conduct as mandated by regulatory bodies. An incorrect approach that involves proceeding with the acquisition without adequate due diligence, based solely on the potential for immediate profit, represents a significant regulatory and ethical failure. This bypasses established compliance procedures and exposes the company to substantial risks, including potential fines, legal sanctions, and reputational damage if undisclosed liabilities or noncompliance issues emerge post-acquisition. Such an action would violate principles of good corporate governance and potentially breach regulations, requiring thorough risk assessment for significant corporate transactions. Another incorrect approach, which is to rely solely on the target company's assurances without independent verification, is also professionally unacceptable. This demonstrates a lack of diligence and a failure to exercise independent professional judgment. It can lead to overlooking critical issues that the target company may wish to conceal, thereby violating the duty of care owed to Saint-Gobain's shareholders and potentially contravening regulations that mandate robust verification processes in mergers and acquisitions. A further incorrect approach, which is to expedite the process by cutting corners on legal and financial reviews to meet an aggressive timeline, is a direct contravention of regulatory expectations. This prioritizes speed over thoroughness, increasing the likelihood of overlooking material risks. It demonstrates a disregard for the established legal and regulatory framework governing acquisitions, which is designed to ensure fair and transparent transactions. The professional decision-making process for similar situations should involve a structured approach. 1. Identify the core objective and any potential conflicts with regulatory or ethical obligations. 2. Consult and strictly adhere to internal compliance policies and relevant external regulations. 3. Conduct thorough and independent due diligence, engaging appropriate legal, financial, and operational experts. 4. Assess all identified risks and develop mitigation strategies. 5. Obtain necessary approvals from relevant internal stakeholders and regulatory bodies. 6. Document all steps taken and decisions made throughout the process. 7. Prioritize long-term sustainability and compliance over short-term gains.